basis through the course of this year due to obvious challenges and headwinds that Europe has been facing, but coming in at $1.09 billion for the quarter. From a vertical industry perspective, despite everything that is going on, BFSI has clocked 9.1% year-on-year on a constant currency basis, bringing total revenues to $2.26 billion. Retail CPG continues a very strong run post-pandemic with the second year of solid growth. And for the quarter, they have clocked 13% year-on-year. And life sciences continues to deliver strong growth at 12.3%, bringing it to about $750 million of revenue. We have been very disciplined in our capacity addition. For the year, we have added 22,600 net headcount, bringing our total associate count to 6,15,000 associates. Our attrition continues to slow, and we continue to both attract as well as retain the best talent in the industry. Our LTM attrition has now come in at 20.1%, and it has been slowing significantly on a quarter-on-quarter basis, and we expect the trend to continue into the next few quarters also. Our investment in our innovation agenda continues unabated. I'm happy to say that for this quarter, we have been granted about 181 new patents, bringing our total to 2,878, which is an increase of 591 patents, which, as I like to say, is more than a patent a working day, and something that we are always very proud of in terms of the acceleration that we have achieved. Totally, we have applied now for slightly more than 7,000 patents. So that's the quarter, and let me take you through the full year highlights for FY23. FY23 revenue in rupee terms is at 225,000 crores, and from a dollar perspective, just short of 28 billion at 27.93 billion. That brings our constant currency growth for the year at 13.7%, translating to 17.6 in rupee terms and 8.6 in reported dollar terms. Operating profit has come in at 54,000 plus crores, and operating margin of 24.1%, which is a contraction of about 120 basis points compared to our last year's margins. Net profit has been strong at slightly more than 42,000 crores, with a net profit margin of 18.7%, bringing our EPS for the year to 115 rupees. As I said, cash from operations continues to be very strong. We converted more than 105% of net profit to cash, which translates to 44,000 crores of cash. Our cash in hand at the end of the period is just short of 50,000 crores. I spoke about the customer numbers earlier and the innovation agenda, and from a headcount perspective, if you look at the full year performance from a segmental perspective, this has been a second year of standout performance from our largest geography, North America. North America for the full year has registered 15.3% growth, bringing it just short of 15 billion at $14.9 billion in revenue. UK has again been an exceptional performer this year. For the full year, they've grown at 15%, and as I shared earlier, for the quarter, they've grown at 17% year on year. So there is a steady acceleration in UK, which is very encouraging. Continental Europe, despite all the challenges that that market has faced, has still clocked double-digit growth at 11%. From a BFSI perspective, which is our largest vertical, it's coming at about 12% growth. And retail CPG, driven by outperformance, especially in travel and hospitality, has a second year of very high growth, coming in at just short of 20% on a year-on-year basis. And life sciences continues to its strong run at 13.3%. So overall, a strong set of numbers to end the year at. We will, as we look into the near term, we had shared with you that the demand scenario is varying by market. Last quarter, I had shared that we expect North America to recover meaningfully through the start of the year. That recovery has obviously not materialized, and it has turned out to be more negative or more slower than what we had originally expected, and that shows through in the numbers. The other markets have behaved along the expected lines. I had shared with you our strong performance in UK, and that, as I said, has continued to accelerate. And the challenges in Europe are well understood, and that market has also played along those lines, though we see increasing positive sentiment in Europe, and we will share that in terms of what we are seeing on the pipeline also. So overall, from a market segment perspective, along expected lines, except the near-term weakness that we have seen in North America. The North America story also translates into BFSI. BFSI has had a strong run, and we are watching carefully the developments. But overall, immediate impact is less, but of course, the near term needs watching. Retail CPG and life sciences, the story is very similar to what I have explained in the earlier one. So from an outlook perspective, an environment where the demand for technology-led transformation, the demand for both optimization as well as transformation agendas from our clients continues to be very strong. But it's something that requires very nuanced approach by us, by market and by vertical, which is where our focus has been. With that, I want to conclude this presentation, and as all of you are aware, this is my 25th and last presentation as TCS CEO, and it's been an absolute pleasure and an honor to have to do this. Thank you for all of you for being here. I will now call upon Kriti to share his perspectives on the way forward, and then we will take the proceedings from there. Thank you, everyone.
Thanks, Rajesh, and good evening, everyone. First of all, I would like to start by thanking the chairman and our board of directors for entrusting me with this huge opportunity and responsibility. Also want to thank Rajesh, NGS, and senior leadership colleagues here who have been with me all along and supporting me and backing me. So I'm taking this based on the support I am promised from all of them, and I'm very happy to take this one. And whatever this organization has given me, it's my responsibility to give it to all the other associates that are working with us here. Coming to the business side, like Rajesh said, we had a good, strong, closing the year in a strong note. Particularly, the year has been really good, and the demand environment has been also very strong. Okay, we have closed the year with an order book of close to about $34 billion. And specifically for Q4, our TCV is about 10 billion, which is probably one of the highest for us. And our Q4 order book contains an all-time high number of deals with TCV above 50 million. And it's also a very, very well distributed set of deals across all verticals and geographies. For instance, the BFSI TCV is about 3.1 billion, and retail TCV is in the order of 1.3 billion. The TCV for North America is about 5 billion. So, and also if you look at the nature of the TCV, it's coming a lot from new account wins as well. So we are quite enthused by the kind of demand we see. Like we always been saying that the sustainability of demand, like the IT demand is quite resilient because most of our customers are embarking on what we call a multi-horizontal digital transformation. And despite the short-term uncertainties, we believe the TCV makes us believe that our theory and thesis is correct, and the demand will sustain. And there could be some uncertainties in the short run, and we need to adjust and work towards it. So with that strong demand is what I am taking over this role, and I hope that we'll have a great year going forward. Thank you.
Thank you so much, Kriti. Thank you so much, Rajesh. As always, we start the question and answers. Please introduce yourself, of course, and if you can stick to 2 questions, and ideally take your questions one by one. It gets very difficult to keep a track. So let's start with CNBC TV 18. Rima?
Thank you very much for that. Rajesh, first question, why are you stepping down? Are you stepping down earlier than what you had said? You had said 15 September. Are you going to be there?
Yeah, absolutely. I'll be
Okay.
there till 15 September, but
you won't be,
it's part of the transition. We're going to be doing the handover on 1st of June.
On 1st of June. Okay, got that. Could you tell us why growth has been a bit subdued this quarter? Kriti just ended his statement by saying that there is some near-term uncertainty right now. So just a 0.6% quarter-on-quarter constant currency growth. Has it been lower than your expectations? And Samir, if you could explain the margin miss. You all had guided for exit margins of 25%. So despite the rupee benefit, attrition coming down, what happened on the margin front? And Kriti, can you elaborate a bit more on BFSI? What exactly is happening? Last time you all indicated that PNC insurance mortgages is weak. So you had already raised a red flag on these two. Are there more segments, or are these getting worse? What exactly is happening on BFSI, especially given what we've seen in the last 2 months? Okay. NGS on deal wins. Each one is one question. She allowed two. All of you will have to remember only your own question.
Divided into 7.
Each one is one question. Rajesh on growth, Samir on margins, NGS on deal wins, Kriti on BFSI, and I have one for Milind. So can you explain this, $10 billion? If it's that strong, why is it not reflecting in the top line? And break it up in cost optimization and the transformation. I think last time you gave a number of 20 cost optimization deals so far this year. What's been that number? And Milind, FY24 hiring target. I think last time you said 40,000 would be the number. Do you hold at 40,000 or any change in that? Thank you.
All right.
One each.
Yeah, no, so Rima, as I said, this quarter has definitely come in weaker than what we originally anticipated, and primarily coming out of North America. North America had slowed last quarter, but our expectation was that it is a cautionary stance from clients, and based on our discussions with clients, and we had expected that it will bounce back into the first few months of the new year. That has obviously not happened. Partially because of the lingering concerns, and then exacerbated by the financial volatility that you saw in the banking system there. Very difficult for us to call whether how long this is likely to last, or how the near to medium term will turn out. But essentially what we are looking at is that from an operational perspective, we have been tightening. So we are well positioned to be able to react on either side. We had brought down our lateral hiring and our overall capacity addition, leveraging the strong investments that we had made in the last year. We are systematically using the return to normalcy on travel to reposition our employee base in North America away from the short-term contingent labor back to our more stable employee-led delivery model with a slight BA side. So we are doing the operational steps required. We are positioning ourselves to be able to either ride out the short-term constrained demand environment, or to be able to react if the market turns positively. So that's where we are currently at. Calling it forward is difficult. So we are doing what's in our control in terms of positioning ourselves to be able to handle it on either side of it.
From a margin perspective, what we, like Rajesh pointed out, what we saw at the beginning of the year, and how the macro environment as well as client sentiments turned increasingly negative, getting into February as well as into March, is something what reflected both on the revenue side and on the cost side. And if you look at it with discretionary spend getting impacted, the revenue gets impacted immediately, while in the very short term, cost is sticky. So that's where, but if you look at it, we could get a flat margin. And if you see, like Rajesh mentioned, we could optimize a lot on the fees to external consultant side, the business associate side of it, and with some help from currencies and operating efficiencies, that offset some of the increase in on-site cost. So it's flat, so it's hardly anything. If you look at it from there's a significant improvement almost 1 percentage point on the BA side of it. That is offset or cancelled out on increase from mainly on on-site manpower expenses.
Okay. So on the BFS side, last quarter itself we had called out there are some, because of the interest rate and inflationary regime, like there have been issues in the insurance sector, capital market and mortgages. What changed this quarter more than anything to do with inflation or interest rates is sentiment, right? Like what happened with one in the banking sector, the sentiments were quite down and people are all not sure what's going to happen. And so there was a greater rush to preserve cost. And they were willing, most of our clients were, whatever they can delay, like defer for a quarter or two, they were deferring it so that they can conserve cash and be ready in any eventuality. So I would say it's more a sentiment at play than anything structural. Actually, if you look at many of the large banks who are our customers are benefiting here, like the deposits are again at an all-time, the deposits are increasing during this banking crisis, so they would be actually better placed going forward. That is for North America. In fact, even in North America, Canada is doing very well, UK is doing very well, and Europe actually, but for one or two specific instances, is doing very well for us. Nordics is doing very well. So there are some issues in US, but most of the other regions are doing quite well for us. And as I said, we have a strong order book as well. So we don't want to say that in a particular quarter these things will be, cannot call it immediate quarter, but medium to long term we are very comfortable.
Yeah, and the deal wins. Yeah. Overall, I think $10 billion by any measure is a fantastic performance by our sales folks. Extremely pleased with the breakup of those 10 billion deals. North America contributing to about 5 billion of them. BFSI contributing to about 3.1 billion. Retail 1.3 billion. And it's a mixture of all verticals, all markets, extremely broad-based. So we're quite pleased with the way that the deals have spawned and the way that they've got closed right through the year and right through this quarter, I should say. Right. I think in my interactions with all these clients over the last quarter, the conversation starts and stops with ChatGPT. Right? I think everybody talks about ChatGPT and what it's going to do, and I think for once, I think very clear that innovation is surpassing productivity. I think, and that kind of theme is what is spanning out in all these deal wins that we have. Right, it's a huge amount of focus on cloud data. At the same time, machine learning is a very, very important area of focus for people. Almost everyone is asking, how are you integrating ChatGPT in your offerings, in your this thing, or do you have plans of that? So, overall, I think, everybody is feeling that, yes, there are no big budget cuts or anything, right? But spend wisely. Right? I think that's the kind of sentiments that we hear. We are extremely happy with respect to the deal wins, where we are. And in fact, there's one mega deal in that overall 10 billion, and minus that mega deal as well, it's a fantastic performance. Huge number of deals which are 50 million plus, right? Which augurs well for our future growth, right? I think that's what I would say.
Rima, my answer is simple. Yes, 40,000 stands, campus offers. In fact, we just concluded our national qualifier test where 600,000 plus people appeared in the test. And so far, we have already issued 46,000 offers. So yes, it stands, 40,000.
Shivani,
46,000 offers so far.
Anisha Jain, ET Now, and Anisha, no memory exercise, please.
Well, I thought you'll be kind, given it's the last one with Rajesh. We'll be allowed to take at least more than 2 questions. But good evening, gentlemen. Hi, Anisha, this side from ET Now. Rajesh, wanted to understand from you, is it fair to say that FY24 growth will be more back-ended versus front-ended? And given the fact you're talking about increasingly negative sentiments in US, which started from February onwards, is it likely to get worse before it gets better in North America? Kriti, the question to you is, what is, if I had to ask you 2 focus areas as the CEO, what will that be? And also the corporate structure that was put into place last year, will that continue, or will there be any rejig as far as that is concerned? Samir, is it realistic to say that 26 to 28% is not going to happen in FY24 at least, given the kind of slowdown that we are seeing? And any deal cancellations, etc., or delay in ramp-ups that you are seeing on the ground? NJS, the question to you is $7 to $9 billion. Does it stay? The deal win pipeline per quarter that you had earlier suggested, the guidance for that. And also you talked about no budget cuts. So if you can elaborate a bit on that, whether it is across the vertical, or is BFSI at least seeing some budget cuts, etc.? And Milind, lastly to you, the question on attrition. When are we likely to see those numbers back coming to around 16%? And on hiring addition, etc., is it likely to be much higher than 40,000, 46,000 that you've already done, or will it be in that range?
All right. I'm very tempted to say that in the hands of the new CEO, we all front-loaded. But difficult to call it. So, like you said, the volatility is fairly recent. We'll need to see how it plays out. Like Kriti said, the sentiment is negative. Once that plays into the system, it will take some time for it to play out also. So, immediate near term, definitely wait and watch mode. But medium term, from whatever discussions we have had with clients, we are not seeing large-scale project cancellations. We are not seeing people rethinking their transformation agendas. Many of the longer-term projects are still on track. It's more the discretionary projects which have been deferred or put on hold, or things that you would expect to start off post the winter holidays that has not yet come about. So these are the immediate impact of that sentiment going away. We have seen nothing that indicates that the structural story on technology is in any form impacted, but it requires careful watching. But overall, we continue to be quite optimistic, and we'll have to wait and see what the timing of it will be.
But the next couple of quarters are going to be softer, given the fact all that is playing out.
See, the thing about US is that it moves very fast. Decision making is very, very fast, and also compared to any of the markets, US is the most risk-taking market. So they move fast on the downside, they move equally fast on the upside. So I wouldn't say that 2 quarters is out. They reacted to it. What they have done is to defer, the most deferrable projects, but it could come back equally fast also. So we'll have to wait and see.
See, from a focus area, no surprise, immediately I would like to meet our customers, understand their priorities, what they are focusing on, what they intend to do in the near term and medium term. I would also like to, I've not gone ahead and met though we've been talking to our immediate leadership team, we would like to meet the larger set of associates and provide them the comfort of continuity. And the last one from my focus is, all these years I've been quite comfortable on the BFSI side, being familiar, I need to get comfortable with the non-BFSI side of the business. That would be my focus. From a structure perspective, Anita, that the structure was put in place after a lot of internal deliberations. So as I meet all customers and meet our associates, if there's any tweak that's required, we will do it appropriately. But it's essentially based on the discussions. As I said, the structure was put in place after all the internal discussions. So there's no rush to do anything there.
Coming to 26 to 28, it is a guiding beacon, and it's not a top-down target. We as a team across with business units, the management team and all, we firmly believe that our long-term cost structures can help us deliver 26 to 28, and we can operate in that band. Having said that, given the current uncertainties, it's too difficult to predict when we will get it, but that remains our guiding beacon and something which we aspire for getting as soon as possible. On the project cancellation side, it's more on we are seeing projects being deferred, not, but at the same time, given the order book, you also see projects where customers want us to help them on getting cost takeouts, larger transformation projects. So it's a mixed bag, but on the current projects on hand, there could be a bit of deferment happening.
The ramp up could be a bit slower, and is it fair to say that at least 24 to 25% bandwidth will be maintained in the near term, immediate term? I'm not asking you to.
Alisha, let's
Well, we'll not get into the guidance range or a specific one. As I said, there are uncertainties. You also need to keep in mind that we give typically our increments at the beginning of the year, and it's a full cycle increment. You need to factor that in as well.
The overall, as I said, minus the mega deal as well, that we are in the upper side of the 7 to 9 billion thing. I think we are comfortable with that range. I think the overall qualified pipeline looks extremely good, extremely broad-based, and in different stages in which we are operating, and that looks very promising. Right? I don't think so. There's no reason for us to tell you that we'll be going below 7. Right? It's not warranted. Overall, the qualified pipeline that we have, the stage at which they are in, I think we are quite comfortable and confident of that 7 to 9 billion range.
And budget cuts for the year, only deferment of sorts?
Yeah, as I said, look, once we go and meet the clients in the next 1 or 2 months, I think a lot more clarity will emerge. But as we met the few customers in the last few weeks, most of them felt that, look, there is no imminent budget cuts or anything like that kind of discussion, but spending wisely is the mantra.
Yeah, on the question of attrition, we came down from 21.3 to 20.1. It seems low because of the way LTM is calculated, but if you look at quarterly annualized attrition, our attrition has come down by 4.2% from last quarter to this quarter. So that's a huge thing. And for the future, basically, I expect us to come to pre-pandemic levels in the second half of this year.
And what about last year, if I can just put in one more, wage inflation in FY24, what your expectation is versus FY23, even an industry outlook?
We will, like what the business is saying, we also basically look into the markets, how it is going, and we'll play it by the year. But we obviously will do the right thing for our people.
We'll take all additional questions offline. Harshada Sawan, CNBC Awaaz.
Good evening and good to see all of you. I wanted to understand, Kriti, from you. You've seen the 2008 crisis. I want to understand, when you speak to clients, how different is it now? How is the sentiment different than it was then? And is it more concerning, or is it far better than what it was in 2008? Also, could you give me a little bit of texture on the deal wins in BFSI? 3.1 billion is good, but what kind of deals are these? Are these long-term deals, short-term, and what's the visibility primarily on BFSI going forward?
Sure. From a 2008 perspective, there is no comparison. It was almost like a feeling at that time sky was falling down, right? Today, if you really look at it, what has happened, there is 1 or 2 banks that have fallen, and their overall assets is just about a percentage of the overall US banking assets. So it's not, this essentially spoils the sentiments, but we don't see a banking crisis. And also the government has stepped in and to assure everyone that this could be contained in a big way. So it's a sentiment issue. I don't think we are comparing this with the 2008 crisis at all, and that's been whatever customers are doing, it is, yes, something has happened, should we protect ourselves, should we save some money for the future. So that's the approach. From a overall, our order book perspective, it's, I would say, evenly split, but as you would expect, there would be more cost and optimization engagements at this time than that would be in a normal scenario, because when there is uncertainty, customers do tend to save cost and drive projects that would save them cost more, optimize more than transformation projects.
NGS, you mentioned that in conversations with clients, people are asking you how are you going to integrate ChatGPT to your offerings. Have you started doing that? What kind of integrations are we likely to see?
The answer is yes. Not necessarily ChatGPT, but then I think let's use the word generative AI. I think TCS pioneered this whole quality metrics, delivery excellence programs. Over the last 3 decades or 4 decades, we have collected enormous amount of data on our delivery performance and delivery metrics, how we perform in technologies, new technologies, evolving technologies, emerging technologies, everyone. So you can cut and slice and dice it the way that you want it. We have that kind of data, right? The interesting thing is that, look, how do we apply aspects like machine learning, deep learning on the data, and then see how we could raise the bar on our own delivery capability, on our own delivery performance, and then improve the overall quality of experience for our clients, right? Which essentially means that, look, there will be a lot more reusability of code, a lot more generative capability of code, as well as more proven code of delivery to clients. And one is that what we do within TCS, another is that how do we help clients to reuse their own code, better. So there are a lot of thinking going on, and a lot of pilots are being executed. So naturally, ChatGPT kind of a technology is like any other tool, any other technology, right? So as it matures, I think we will be ready for it. We will have a center of excellence around it. We will have core competencies built around it, and then see what are the drawbacks on it, what are the pros for it, and then use it the right way to deliver responsibly and meaningfully to our clients.
But how soon do you see it turning into a revenue?
It's happening. It's already happening. It's happening already. Yeah.
Thank you, Harshad. I appreciate that. Ekta Suri, Z Business.
हेलो जेंटलमैन, एकता फ्रॉम जी बिजनेस। हम बीएफएसआई सेक्टर की बात कर रहे हैं, आपने क्लाइंट से बात की, आपको लगता है कि अभी भी उस सेक्टर में क्या अभी थोड़ा और पेन बचा है, लाइक और इट कैन रिकवर अ बिट मोर फास्ट?
It will recover. Okay, it's difficult to say whether there is some pain left or not left. Like as I said, it's first of all varying from geography to geography. Like BFSI sector, don't look at it as one single set. Like we are doing quite well in UK, we are doing quite well in Canada. Like our APAC market has done well, and even in Europe, Nordics have done well. It's some pocket. Essentially, US is only a issue that we are talking about here. And there also, you look at the last 2 weeks, even the US stock market is slowly improving. So the sentiments are improving, but there could be some vulnerable banks all the time, right? And all it takes is one of the vulnerable banks to fail for the sentiment to go back. So there is no structural pain. Okay, as long as the inflation comes down, interest rate comes down, everything is going to be much better. Okay, the issues are around inflation and interest rates. Otherwise, the banks are all doing well. Even SVB was a good bank, doing quite well. So I don't want to say that there is a pain left in the system. The sentiments and the overall macroeconomics is what is driving this.
और सर आपने बात की कि क्लाइंट्स ने बोला है कि स्पेंड वाइजली, कोई बहुत बजट कट नहीं है. सो व्हेन वी से स्पेंड वाइजली, डू यू थिंक सो कि अगर ग्लोबल स्लोडाउन की बात ना होती तो शायद उनके बजट्स भी थोड़े ज़्यादा होते, और वो जो वाइजली स्पेंड वाइजली की बात हो रही है वो थोड़ा बजट एक्सपैंड हो सकता है रादर देन कटिंग कॉर्नर्स इन देयर बजट?
बजट एक्सपैंड भी हो सकता है, कॉन्ट्रैक्ट भी हो सकता है, बट इट इज़ नॉट बिग, राइट? इट कैन बी ±1 or 2% here and there in the overall budget. This is the impression that we gain from the initial conversations that we have with our clients, right? But bottom line is that the kind of programs that customers were embarking, whether it is cloud or data, they are kind of irreversible, right? They have gone ahead with it, and they will continue to invest in it. They will continue to leverage the cloud and data capabilities for their own growth. Right? But there are, in any project, overall portfolio of projects, there are certain projects that will have to keep going, certain projects, the pace of which can be slowed down, certain projects can be deferred. Right? That's the kind of a portfolio typically every client has. Right? So what we are seeing is, based on the sentiments, there have been some deferment, there have been some, let's say, taking off the pace of execution, some, keep going at the same pace that we used to do before. Right? So I think, that's the nature of the beast that we are facing right now.
और सर हम AI जनरेटिव चैट जीपीटी के बारे में भी बात कर रहे हैं बहुत से अभी नया एक फैक्ट तो नहीं बोलेंगे बट it's picking up a lot. So, I like to ask you, sir, बहुत से लोग ये कह रहे हैं कि AI, especially chat GPT जैसा अगर generative AI है, तो वो jobs पर भी बहुत असर डालेगा. What's your view on the same?
अभी हमने कितने सालों से देखा है कि कोई भी नई टेक्नोलॉजी आती है तो जॉब कम नहीं होते हैं, जॉब बदल जाते हैं. वो भी अभी इसमें भी ऐसा ही होगा. हम लोगों को दूसरे स्किल्स में लोगों को एक एड ऑन करना पड़ेगा तो व्हाट दे लर्न एंड बेस्ड ऑन दैट एक्चुअली द न्यू वैल्यू विल बी क्रिएटेड फॉर द कस्टमर्स एंड फॉर आवर पीपल. सो इट इज नॉट गोइंग टू बी nullification of jobs. It will be replacement and new jobs coming out as a result.
Thank you. Dibangana Ghosh from Money Control.
Good evening, gentlemen. So my first question to Rajesh. So we have been hearing that there are talks going on that there is a possibility that your advisory role might get extended. So any update on that, and will you be continuing beyond September with TCS or Tata Group in an advisory role? My question to NGS, sir. So you have been mentioning about ChatGPT. Could you share some specific industrial use cases? Because I know TCS has been working a lot in terms of developing those technologies for clients like Google and Microsoft as well. For Milind, so in terms of the industry has been under pressure, we have seen there, and it's reflecting in terms of onboarding delays of freshers, plus some companies have decided to do a pay cut in terms of what the freshers were initially promised. Wanted to understand how is TCS assessing the situation, and also can we expect 100% variable pay? For Kriti, could you tell us a little bit more about if you're planning any structural reorganization? Will you be adding BFSI as a part of it?
The first one is easy. This is TCS results presentation. My personal career progression will talk offline. So don't even, yes.
Yeah, so I think, ChatGPT is something that, I want to avoid that word, but then generative AI is the thing that we are focusing on, right? TCS, for example, if you take TCS banks, right, the complete code is generated using our Mastercraft tool, right? So the capability and the skill set that we have in terms of developing software that generates software is a core competence of TCS. Okay. If you look back to DataQuest in 1990, there was an article on TCS which talks about artificial intelligence. So artificial intelligence is not a new subject for us, right? It has been there, but then it's just that it has taken so much time to mature, and there are new possibilities right now, right? So the intent is that we have a lot of our data, lot of our proven code, repository of code that we have, libraries that we have, architectures that we have, design patterns that we have. All of that, how do we leverage to provide that generative capability to developers, which will result in proven code that can be developed. That's the focus that we have, and I think, that's the kind of work that is going on already in TCS right now, right? Regarding use cases, I don't want to call out any use cases, because to me, any technology where use cases have come in, they have never matured. In my perspective, if you take blockchain, everybody talked about use cases. Then we didn't see blockchain to be a big wave of thing, right? It's, I'm not saying that blockchain is not successful, right? Blockchain is there. But so I think we are focusing on how do we leverage the generative AI as a technology to deliver enterprise capable systems. I think that's the focus, and I think we are reasonably advanced about it.
Sir, any update on the BSNL deal?
Offline.
Can you repeat your question?
Yeah, so I was asking, how are you assessing the whole onboarding, fresher hiring situation, given that a lot of companies have started to delay onboarding, plus there are pay cuts happening in terms of what freshers have been promised initially. So wanted to understand how is TCS assessing that situation, and also what do we expect, and will we see 100% variable payout this time?
So answer is simple. We always have honored all our offers and will continue to do it this year also. There will be there were some delays in a month or two for onboarding people, but it will happen. We are honored all the offers. So, and in future, and no reduction in salaries, nothing. So, whatever we have committed is what we honor. With respect to variable pay, yes, it is 100% variable pay this quarter.
Any hikes? What is going to be the quantum of the hikes? Sorry,
Okay.
I'm not getting a turn. I'm just
So our hikes are similar to what we normally do every year. For high performance, it can be in the range of 12 to 15%.
What is the company average?
I think without giving the average, let me just say basically what we normally do means high performance 12 to 15%, to go from 12 to 15% to 8% to 5% to 1.5%. That depending on the performance.
Tushardeep from BQ Prime.
I had a question for
Sure.
Kriti. Yeah.
See, but I answered that question before as well. Like, we are not in a hurry to do any structural change or organization change. We would be talking to the associates, we would be talking to the customers. We will see what is required and do whatever is required at the time. The tweaks, whatever we need to do, we will do. We are not in a hurry to do. So
Right.
don't
Just a
Devangana,
follow-up
we'll
there.
take
Will
that offline. We are
B-
genuinely running out of time.
Will BFSI be a part of, just one question, will BFSI be a part of the structural reorganization?
I'm not even promising a structural change. Why are you asking? BFSI will be part
No,
of that.
I mean last year's
Tushardeep
structure.
from BQ Prime.
Hello, gentlemen. Couple of questions. First, Kriti, how do you see the BFSI growth in the next 2 quarters? Given that we are now at 9.1%, do you see BFSI growth going back to double-digit growth in the near term? And what are your ideas for the full year as well? I mean, FY24. Rajesh, you are going away quite early, 3.5 months as per the scheduled date. So how has the transition been so far with both of you? Those lines. A small question to Milind. NJ sir mentioned that we have started incorporating generative AI into your products. So how the staff also been started training on these technologies? That's it. Thank you so much.
Tushar, like on the BFSI growth side, I'm not going to call on what's going to be happening in the next 2 quarters. Like, as we don't give guidance, and also we said there is a lot of uncertainty here. You need to look at what is our demand. Okay, our demand has been very strong. So if something doesn't happen in Q1, it doesn't happen in Q2, it will happen in Q3 or Q4, because demand is there, customers are willing to sign up new projects. And more importantly, our thesis, as we said, is we are in a phase where the technology is at the right center of the business transformation, and it makes a huge competitive advantage, gives a competitive advantage to all the clients. So that spend doesn't go away anywhere. Does it happen today or does it happen a couple of quarters later? It's going to happen, and we are also in it for a long run. We would continue to train our people, we'll continue to work with our customers to ensure that those projects are delivered to them. So it's very difficult to say will it be Q1, how Q1 will be or Q2 would be. But we believe long-term quite strong, particularly based on the order book we have.
Sure, I'm not going away early. So September 15th stays. But from a transition perspective, this is classical TCS transition with our clients also. So first half, I am primary, he is shadow. Second half, he is primary, I am shadow. Having said that, as I said, I don't expect the transition to be rocket science, but it needs to be done diligently. So we will be available. but it's going very smoothly. We were focused on this results. We are now going to be traveling for the next 6 to 8 weeks, meeting with customers, meeting with our field teams, and that's been planned, and then we're going to be executing on that. So exact center would have been June 15th. June 1st is as good a date as any, but it's as per plan.
I think building capability standpoint, AI has been a large practice for us for many years. Generative AI is about applying some of that expertise in the model in which we operate. That is something which is being conceptualized. That is also, it's about more about the operating model itself and how it changes and what does the AI co-worker do in the future. All those things are being conceptualized right now, and appropriate training for the appropriate people has already begun.
Ashish from BTI.
So most of the questions answered. Just a small thing, is the mega deal win Indian? Is the mega deal win, is it an Indian deal win, and how big is it in the $10 billion?
Oh, no, that's the one that we announced earlier. It's in UK in the insurance space with Phoenix. That's the only one. That's about 750 odd million out of this 10 billion.
Shivani, Business Standard.
Hi, gentlemen. Good evening. So the mega deal question has been asked by Samir. What has been the impact of SVB, Credit Suisse on the margins, if you can elaborate more on that, if there has been this quarter? Kriti, one question on the banking sector. While some of these banks have folded up, you've had long-term relationship with them. What will be the impact on the existing contracts that you have with them? Any significant, or there will be some more time for you to know what that impact will be? Rajesh, final quarter, you kind of sounded a little, slightly different when you were giving presentations. So thoughts on that? You're smiling, really, but still. Thanks.
So we don't call out client-specific details, so I'll not be able to add more color on what you have asked. But if you look at our quarterly margin, it's sequentially flat.
So on the contrary, you mentioned specific clients. As you know that SVB has been taken over by a different new bank. And so most of the contracts that are all all the critical contracts have been innovated to the new one, and we are working for the new bank. And it's true for SVB and for the other case also. So all the critical work is continuing. There are some change and transformation programs that have been deferred or paused.
That impact, you will come to know how sooner or later?
Not a material impact for us.
Economic Times, Ramita, and we have Surbhi as well, so one question per person, whoever.
So one query for Milind, how many freshers onboarded in Q4? For Rajesh or Kriti, whoever would like to take this, QOQ growth has been a little over 1%. So, I mean, that is just a little more than uncertainty. We would like to understand how is, TCS preparing to bag large deals to kind of also, if customers are being more cautious in terms of, the outlook on pricing, because over the past few quarters, the discussion that we had was that pricing was improving in a few pockets, but now that they are more cautious, how has that impacted pricing in general? And yes, in terms of large deals, how are you looking at it?
So, Ramita, 0.6% is obviously, but as I said, the main shift is in North America, and it's a fairly short-term shift. So if you look at, let me cover UK, Europe first, and then I'll come back to North America. UK is almost 5% Q on Q, if I remember correctly. Very, very strong, and not just the quarter performance, both the pipeline, near-term visibility, everything is very strong. So UK is actually, as I said, has been accelerating over the last few quarters, and this quarter also it did better than last quarter in terms of growth itself improving. So UK is in a good place. Europe, interestingly, Kriti touched upon it. So Europe, we spoke about sentiment improving in Europe. This time our deal wins in Europe have come in much higher. So deals greater than 50 million in Europe, in this quarter we have closed more than what we did in the first 3 quarters of the year. So the Europe sentiment is now translating into actual deal wins. On a quarterly basis, the actual TCV has come in almost 60% higher than last quarter's TCV. Europe, that sentiment is converting into actual deal wins. That needs to convert into revenue. If I look at specific segments, BFSI, Nordics and Benelux, those areas were earlier stressed. They have actually turned positive, but Central Europe requires watching. So we need to look at it from a regional perspective, but Europe incrementally so it was on a falling trajectory. It continues to be on that falling trajectory, but incrementally it's in a positive place. That brings us to US, which is our largest segment. The US weakness is very, very recent, right? And whatever we have shared with you in the past, our stance on that has not changed. We don't think there is structural weakness in it. We are not economists. So many people have called me and said, I told you so, there is no soft landing and you can't raise interest without a recession. Maybe that is true, maybe that is not. So from our operating perspective, our stance is one, as I explained, we are making sure that our cost structures and our operating model is tuned to be able to react on either side. And from our field perspective, we are staying very close to our customers and making sure that we are fully connected. And we are participating in those discussions and dialogues, irrespective of when the decision making will return. So that's the way to look at it. So while the near term, the print number is weak, but we are not, anywhere near as concerned as we would be in a different scenario. Pricing is actually both on a quarter year-on-year basis as well as on a full year basis. Actually, realizations have improved. So that has come in. And this current one is more project cancellations rather than discounts or any pricing impact. So we have not seen that translating into those kind of areas. And that will depend on how weak the environment is. If it becomes significantly weak, then maybe something will come about. But at this stage, that's far away, and we are not anticipating that.
Just to add to her question, hi, I'm Surabhi from the Economic Times. So I think Q&Q growth has come at around just about 1% or something. So it seems to be more than just uncertainty. If you could just explain what are the kind of deals that you're seeing right now or that you're not seeing. We've heard a lot of analysts talk about vendor consolidation, how companies are probably going for more outsourcing. And what explains this just 1% Q&Q growth? Are clients really holding on, or they're slashing client budget, tech budgets, and what can we expect in the next few quarters? I know you've answered a lot of questions on that, but if you could just explain on what kind of deals you are seeing apart from BFSI, that I think Kriti has explained.
So Surabhi, the deal flow is very strong. Deal flow at 10 billion, and if you remove the...
Sorry, I want to ask the deal flow number, 10 billion. Does that make any sense? Because like NGS also said that everybody is waiting and watching and there's a lot of uncertainty. So can we actually go by that 10 billion number?
We should. That's a real TCV. How it translates and what it's... And also if you look at the nature of that TCV, as I said, there is one large deal at about 750. The next one is sitting at less than 250. So it is nicely bunched at deals in the 100 million kind of a range. And that gives greater confidence on the short term. So the 1% has to be seen in the context of what happened in North America in this period. We don't see that immediately, but it requires careful consideration. Beyond that, there is nothing much. I mean, it's not a panic situation. It's not that people are completely cutting budgets. They're not telling us that prepare for a significant downturn. All of them are saying the same thing, that guys, hold on. We need to be careful. Let's see where it is going, and then we will take a call. Don't unwind. Don't go away. Stay with it. So the contract side of it, that decision making is happening, but the actual discretionary projects, things that you would expect to start, they are not started yet. Maybe it will, come back. Maybe it will turn out to be something more negative, but that we will see. The point is that we got to position ourselves, as I said, for either direction, and that we are doing beautifully.
Ramita, just take a minute. Ramita, we do not call out numbers, fresher hiring numbers in a quarter. All I can tell you is whatever offers we have rolled out last year, we are going to honor each and every one of them, and the people are getting already onboarded or getting onboarded as we speak.
Ramita, we'll take this offline.
Over the year, yes.
Varun Sood, second last question from Mint.
Hi, good evening, gentlemen. Sir, you had 34.6 billion TCV in the year ended March 2022, and in the fourth quarter you had about $11.3 billion deal wins. So when this year you told us that about a strong deal win of 34.1 billion and 10 billion, the base of TCS also has significantly improved. So the way I look at it, actually the TCV numbers are a little low compared to the historic past. Now, your client addition, 100 plus, that has also significantly slowed. You added about 10 in the last year. This year, it's just 2. Even if I look at your 7 industry verticals, 4 of them are growing slower than the company average. One of them is bang at the company growth of 13.7, and only 2 are growing more than 13.7%. Now, all these numbers put together appears to suggest that there is something, a broad-based slowdown at TCS. A, would you agree with this kind of a conclusion? And having said this, what would be FY24 looking like? You don't give any guidance, but what will be FY24? Will it be like similarly at this numbers, what we've closed this year, or could it be any better? Because TCV by itself is a little misleading, if I can say so. That's the first broad, and I just have one last question. So on the chat GPT, now over the last 10 years, 15 years, every time a new technology has come, cloud has come, robotic process automation have come, we've always tend to conclude it, and journalists and analysts are guilty of it, that this is the death knell of Indian IT. It hasn't really happened. Now, should chat GPT or large language model or generative AI, should we look at it that it will actually increase IT outsourcing, both in terms of revenue and in terms of margins also? If you could just help us understand how over a 5 or a 10-year horizon we should look at the impact of generative AI on IT. Thank you.
Well, on the first one, numbers are what they are, right? And you laid it out nicely. So TCV cannot be misleading because the number is exactly what you said what it is. Now, we have given you commentary on the rest of what is happening in the market. Based on that, you can make your own conclusion as to whether it will be good or whether it will be bad or somewhere it will be in the middle. We stay away from giving you specific guidance in terms of what the next year will be. But it's our job to report what the numbers are. It's our job to give you color on what we are seeing. And also it is our job to tell you what is our operating stance, which we have shared with you. Based on that, make your conclusions. And then we need to operate. We will do our bit. We'll see where it ends up next year. GPT.
As far as the chat GPT is concerned, I think it's too early to say how it will span out in the future. But my own take on that is it's the generative AI capability is something that is going to make technology relevance and its acceleration even higher, right? Every small area, every area that was not touched upon by technology, I think it has the potential to be touched, right? That's the way that I see it, which essentially means that, look, we are going to see technology everywhere, and it will only accelerate adoption of some of the borderline technology or frontier areas of technology quicker. I mean, that's my take on it, but it's a future thing. Predicting the future is the worst thing that you can do in your career.
And final question from Vivek from Infosys.
Hi, good evening everyone. So you said that in the retail vertical, travel and hospitality have been rebounding from COVID and that has been fueling growth. So I just wanted to understand, do you expect this to continue going ahead, or do you think some sort of normalization will happen there? And also your outlook on communications and media vertical for the near term. So that has been a little slower compared to other verticals. So what is your outlook on that? Thank you.
TTH, travel and hospitality, definitely will normalize because we don't know. I mean, right now all the flights are, you don't get a ticket anywhere, but it will be reasonable to assume that it will normalize. So there's not much to call on that one. CMI is a more complicated one. It is region and account specific. What we found within the CMI vertical is that the comms, the communication service provider side, is quite strong and doing quite well. The information and media has been the one where the weakness has been. Difficult to call as to where that will be. But the communication service providers, there the investment agenda is still very strong, and there's a lot of growth happening on that. Media and info services is where the weakness is.
Thank you.
Thank you, gentlemen. Thank you to everyone joining in person and virtually. We have a few questions that have been sent from the journalists that couldn't be here. A lot of them have been answered, but the ones that haven't, we'll definitely try to answer this offline. We're really out of time now. Thank you, everybody. Have a good evening.
Thank you.
Thank you.